Also wanted to touch on our question of the day that I selected out of the questions we received, and that was, what is the difference between an ETF or an exchange traded fund and a mutual fund? An ETF is what is called an exchange traded fund, and it is made up of an exchange. So that would be let's just say the S&P 500 technology sector. And so you are going to have within that exchange a bunch of different stocks within that exchange traded fund. Now you can buy an ETF just like you can buy a stock. And when you're buying an ETF, again, you're buying a whole range of stocks. You're not just buying one stock. Now you can buy and sell an exchange or an ETF anytime during the day. You know what it's trading at when you buy it, and you know what it's trading at when you sell it. Now when you go to buy an exchange traded fund or an ETF, it's just like buying a stock. So you can only buy them in whole numbers. Whereas a mutual fund, which again is a basket of stocks, also it is traded differently. It's comprised of just, again, we'll say it's a technology fund. It's going to be actively managed, like we spoke about last week, where people are going in, buying and selling within that fund. However, when you buy a mutual fund, you can say, I want to buy $10 of this mutual fund at 9:30 in the morning when the market opens, but you won't really know how much you bought of that fund till the end of the day. So mutual funds settle at the end of the day, and they start at about 3 p.m. and close by 4 p.m. So if you're watching the stock market on a day-to-day basis, when you see 3 p.m. hit, you'll really start to see the market move one way or the other. If the momentum of the day is buying, you'll start to see it kind of jump up a little bit, and that's the mutual funds settling their buy orders into their funds, and they're executing those trades in the market. So again, both are giving you access to different baskets and bundles, but they're just traded very differently. The other side of that is with mutual funds, you are typically going to be charged a commission up front if it's an A share, or you're charged sales charges on the back end by the different share classes. Where that is not the case in an exchange traded fund, you may have expenses within it, but you're not paying an initial commission up front of a sales charge to buy the ETF.